In this video, I'm going to show you how you can potentially double your gains on one of my favorite stocks, Nvidia, using a powerful option strategy called leaps. I'm going to break down the strategy step by step, share with you the risks and rewards of the strategy, and go over why this is one of the most capital efficient option strategies out there. Let's go. Hi, my name is Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. With that said, let's jump in and get started. Now, a quick disclaimer before we get started. This video is for informational and educational purposes only. I'm simply showing you my trades and how I trade. Any content in this video should not be considered financial advice. So let's talk about what exactly are LEAPS options. LEAPS stands for long-term equity anticipation securities. And in simple words, all it means is these are longer dated option contracts, calls or puts, longer than 1 year and can go all the way up to 3 years. So why do I like LEAPS options? I like LEAPS options because they're one of the most capital efficient strategies out there. Since we're talking about Nvidia and using Nvidia as an example, Nvidia is currently trading around $174. So if you were to go out and buy 100 shares of Nvidia, it would cost you $17,400. Now, instead, we could go out and buy a LEAPS option on Nvidia about a year out, and that would cost us only $4,180. So as you can see, that's only 1/4 of the capital required versus buying shares, and then you get the same amount of exposure as you would if you bought 100 shares of Nvidia. So next, let's look at some of the things that I look out for when choosing the correct leaps for my options play. So ideally, you want to buy your leaps at a good support level. And again, some examples for a good support level could be the 200-day simple moving average with RSI close to 30, or the stock is trading close to the bottom of the Bollinger Band. Again, the bottom line is you want to enter your leaps at a point where the stock is actually down from its all-time highs and has enough room to go back up, and that's how you make your money. When choosing your leaps options contract, you want to choose a delta anywhere between 70 to 80 or 70 to 75, depending upon how much capital you can allocate. You can go with the higher delta and go deeper in the money with your leaps contract, but obviously it would cost you more and would offer you more protection. So again, the decision is yours and how much capital you can allocate. As long as you stay between the 70 to the 80 delta range, you should be good. Now, the delta selection also plays another important role. For example, if the stock rises by $1 and you chose a 70 delta leaps option, then your contract would move up by 70 cents when the price of the stock rises by $1. On the other hand, if you choose a 80 delta, which would cost you a bit more, then every time the stock rises by $1, your options contract would rise by 80 cents. You obviously want to choose a leap options contract at least 365 days out or more if you have additional capital to allocate. The longer dated leaps option you choose, the more time you have to bounce back in case of a market downturn. You also want to choose an options contract that has good volume and open interest, and that allows you to get in and out of your trade quickly. Next, let's look at some pros and cons of a leaps play. The biggest advantage of a leaps play, according to me, is the efficient utilization of capital. We went over that earlier in the video. You have a potential to 2x your returns using a leaps play versus if you utilize the same amount of money to buy 100 shares of the stock. With the leaps options play, you can also sell covered calls against your leaps to make additional income that I'm not actually counting in this video. That's a pretty broad subject in its own, and I'm going to do another video on that at a later time. But just for informational purposes, there is a possibility of making additional income against your leaps options by selling covered calls. At the time of expiration, you can exercise your leaps option, meaning that if you sold a 150 strike price leaps option, you have the ability to buy 100 shares at that strike price, no matter what the price of the stock is at expiration. On the other hand, you can obviously sell your leaps options for a profit, which a lot of people generally buy the leaps options contract to profit from the rise in the stock value. On the downside, when you buy a leaps options contract, it's simply a longer dated options contract, whether a call or a put. And since you're buying the options contract, you could lose 100% of that capital. So for example, if you're buying a call leaps options contract and the stock does not rise by expiration, you get to lose 100% of your capital. On the contrary, if you play on the downside with the put options contract, if the stock does not go down, then you lose 100% of your capital. So keep that in mind as you make one of these trades. Now, just like you buy any options contract, there is theta decay or time value decay on that options contract. With leaps, since they're longer dated, the theta decay really doesn't come into the picture later down the road or closer to expiration. Theta starts to deteriorate faster. Now, obviously, with the leaps play, since you're not owning the stock and you're just controlling the stock with the leaps option, you get no dividends versus if you had bought the shares of a stock outright. I have the last con listed as not ideal for short-term plays, but I do know a lot of people who will get in and out of a leaps play very quickly if they can get the anticipated move. So this is not really a con. It totally depends on you and how you want to make your trade. For example, if I enter into a leaps options trade and I'm up 30-40% within the next few weeks, I would exit that position, take the profit, and invest that capital elsewhere. In other cases where I'm looking for a larger move and not just a 20% return, I would keep my leaps options play open for a longer time. And then once I feel satisfied with the profit that I see, I would exit it at that point. So again, it's totally dependent on you and what you're intending to do. But those are the options that a leaps play offers. Next, let's talk about Nvidia and why I believe Nvidia is an ideal candidate for a leaps play. Nvidia not only leads the Mag 7 with a 4.2 trillion market cap, but also has a dominant position in the AI and the GPU markets, powering technologies behind ChatGPT, autonomous driving, and data centers. Its data center revenue has grown triple digits year over year, supported by strong margins and earning beats. Now, let's check out its 5-year chart on Yahoo Finance. When making a leaps play, you want to choose a stock that shows you consistent upward trajectory, meaning that if you buy a leaps option, there are stronger chances of success in your leaps play. So again, looking at the 5-year chart from 2023 all the way up till here, Nvidia has continued to point upward. Now, obviously with the market downturn, it did come back down, but as you can see, it came back strongly and is at all-time highs at the moment. We can also look at the 1-year chart, and then you can see April onwards, once the market started recovering, it came back very strongly and again is trading at all-time highs. We went over the market cap, 4.2 trillion market cap, trades with a PE ratio of about 56, consistently beating earnings per share quarter over quarter. The revenue and earnings bars show consistent growth. If you look at analyst recommendations, they're mostly green and dark green, meaning we have buys and strong buys. It's currently trading around 174 with an average price target of $180 and then $250 on the high side. And one of the best things that I like about Nvidia compared to a lot of other companies, it operates with a 52% profit margin, which is absolutely fantastic. Now let's look at Nvidia's 6-month chart next. And looking at where it's currently trading, it's closer towards the top of the Bollinger Band. And also, if we look at the RSI is close to the overbought level, which is 70. So generally speaking, this would not be a good time to make leaps play on Nvidia. Keeping in mind it's closer to the top of the Bollinger Band, I would like Nvidia to retreat at least towards the middle of the Bollinger Band. And ideally, I would like Nvidia closer to the bottom of the Bollinger Band before I consider a leaps play. So those would be the ideal entries for a leaps play into Nvidia. But since I'm just showing you an example of how I would trade, so assuming that Nvidia is currently at a good support level, this is how I would make a leaps play. I would go to the options chain and we want to try to go out at least a year. So the closest to a year right now is the June 18, 2026 options chain. This is about 326 days out. So again, that satisfies my criteria for being close to at least a year out. And basically, like I mentioned earlier, I generally look for a delta anywhere between 70 to 80. I also mentioned earlier that I look for contracts that have a lot of volume and open interest. And what that would do is that it would make the bid and ask very tight, meaning that it would be very easy for you to enter and exit that specific strike price. Looking at some of the strike prices that have a lot of open interest and volume, we have this 79 delta, which shows about 15,000 contracts right here. And then if we go a little lower to a more capital efficient delta, which is a 74 delta, This is the 150 strike price. And if you look at this options contract, it probably has the most open interest and then volume as well. So I like this right here. It meets my ideal criteria, which is about a 74 to 75 delta and lots of open interest and volume. And then if we go ahead and click on this options contract right here, the mid price is 41.80, meaning that it would cost you $4,180 to buy one Leaps options contract of Nvidia about a year out, and then would let you control 100 shares. So then if we went ahead with this options contract, well, let's see what we would need Nvidia to do for us to get a 50% return or 100% return on our capital. So I'm going to go right here, and I have this options calculator website right here. I went ahead and inputted Nvidia and selected the June 18th options contract with the $150 strike price. As you can see, it would cost us $4,180 to buy this one Leaps options contract. So basically, if you were to purchase this options contract right now, and if we go ahead and wait about 6 months and look at where Nvidia is trading in 6 months, so if by January 15, 2026, Nvidia is trading at $196, we would make $1,019 on this options contract, which is basically a move of 13% up from the current price of Nvidia. Or if Nvidia makes a 20% move, we would make $2,104, which if you look right here, that would give you about a 50% return. If Nvidia rises about 33%, which is about $230 by then, in that case, your options contract would yield a return of 4,128, which is basically a 100% return or exactly double of what you invested, which is what we're targeting. So as you can see, you can play with the options calculator and determine what kind of a return you would get if Nvidia gets to a certain level. But again, what's crucial is you want to buy your Leaps contract at a point where the stock is down from its all-time highs and has enough room for a leg up or to make another all-time high. And if you follow those rules, you can certainly double your money or even more buying Leaps options on your favorite stock. So that's it for today's video. If you enjoyed it, learned anything useful, or found it helpful, don't forget to hit that like button, subscribe to my channel, and comment down below with any thoughts or questions. If you would like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.